What's up everybody, welcome to another episode of China Update, where I provide you guys with the most up-to-date political, economic and geostrategic analysis on the world's number 2 economy. My name is Tony, let's jump in. Happy Monday everybody, I hope you had a wonderful weekend. In late July last year, torrential rain struck the provincial capital of Henan, Zhengzhou, causing hundreds of deaths and billions of dollars in damage. We covered it on here at the time. Also at the time, the State Council, China's cabinet, assigned a special investigation team to produce a report on the disaster. This report was published over the weekend. The official report concluded that nearly 400 people died in the flooding and that the province as a whole suffered direct economic losses worth 120 billion RMB, approximately $19 billion. Interestingly, the report also concluded that local officials had participated in a massive cover-up and quote-unquote deliberately obstructed the reporting of the deaths and disappearances of almost 140 people. The report said 14 passengers died on the Zhengzhou subway system on July 20th and 6 people died in an expressway tunnel during the flooding, numbers that local officials had not published. Now, everyone is painfully aware of the deep systemic issue of local corruption and lack of transparency, but this level of criticalness in state documents towards local governments is very rarely seen. Scathing comments go as far as concluding that local officials poured resources into saving face while ignoring their duties to save lives and prevent damage. Corruption was well documented too. The report said although the city had invested several billion RMB into a special program to prevent flooding damage, only 32% of the funding was actually used to build and enhance flood control infrastructure, yet over 50% was used for landscaping and gardens. According to state-run Xinhua news agency, 89 officials have been arrested and are under criminal investigation, including the city mayor. Some commentators have argued that the Zhengzhou Report is a welcome step towards greater openness and transparency in government in China. Others, however, point out that this report itself cannot be independently reviewed. As usual, top leadership and central government remain clean in the report, and of course, the report acts as yet another reminder that fabricated data and cover-ups remain a systemic practice among local authorities. Yesterday, on Sunday, Taiwan reported the largest incursion by the People's Liberation Army Air Force into its air defense identification zone since October. The Defense Ministry claims that this latest PRC mission included 34 fighters plus 4 electronic warfare aircraft and a single bomber. We should not be surprised by this development. Taiwan has complained for more than a year of repeated missions by the People's Liberation Army Air Force into its air defense identification zone. In 2020, US-based Rand Corporation calculated that Taiwan had to scramble aircraft almost 3,000 times in response to these incursions. And late last year, we covered speeches by Chinese academics, state media, and officials in the mainland who all stated that military activities would intensify this year across the Taiwan Strait. Taiwan calls these military activities gray zone warfare, designed to both wear out Taiwan forces and test Taiwan's responses. Also over the weekend, US and Japanese naval forces carried out exercises in the Philippine Sea, which according to the US Pacific Fleet included 2 carrier strike groups. Now next up, let's touch on several developments in the Chinese technology sector. According to data released by the National Bureau of Statistics, Chinese production of integrated circuits in 2021 increased 33.3% year-on-year. This within the context of an international chip shortage. Though the breakdown by manufacturing technology was not published, this does indicate that Beijing is serious about its efforts for self-sufficiency in chip manufacturing and fighting a protracted technology competition with the United States. We remember in 2020, Beijing published a strategy which called for China to domestically produce 70% of its semiconductors by 2025, and then for China to move towards being a technology leader. The blockchain-based metaverse has caused a lot of excitement with investors all over the world, including among Chinese investors. Hong Kong-based blockchain gaming startup Animoca Brands Corp, that's Animoca Brands Corp Limited, recently completed a whopping $359 million funding round, bringing its valuation up to nearly $5.8 billion. The gaming firm is building virtual worlds, increasingly referred to as the metaverse, where players can visit with personalized visual avatars. Though China has been cracking down on cryptocurrencies, it seems that there is still a large appetite for investments into blockchain-based technologies, including the metaverse. Chinese financial media outlet Caixin Media reports that in the final quarter of 2021, Xiaomi Corp was China's best-performing smartphone maker in the global market, grasping a market share of 12%, flat from the same period in 2020. Quote, Apple Inc. retook the title of world's biggest smartphone vendor in the fourth quarter with a market share of 22%. Due to strong demand for the new iPhone 13 series in the Chinese mainland market, even amid shortages of key components, Samsung claimed the second spot with a market share of 20%, end quote. And while we're on smartphones, according to a report released by a Beijing-based think tank affiliated with the Ministry of Industry and Information Technology, China's smartphone shipments for 2021 rose 15.9% year-on-year to 343 million. This number has still not returned, however, to pre-pandemic levels in 2019, when 372 million smartphones were sold in the country. Another proxy indicator that consumption in the world's number 2 economy remains weak. And last up, the Evergrande housing crisis. Quickly, if you're enjoying the episode, don't forget to hit the like button. It's the only way this video can be shown to new people. And if you're watching this for the first time, you're getting some value from the episode, maybe consider subscribing, hit that bell notification, and you'll have the most up-to-date analysis when I release these every day. Okay, let's move on. Several financial media outlets and analysts have reported that the Guangdong government in southern China ordered an audit of Kaisa Group in early January. It is now increasingly apparent that PricewaterhouseCoopers has audited the assets of Kaisa Group Holdings. Though PricewaterhouseCoopers has not yet published the results of this audit, Chinese financial media is reporting on leaks that suggest the accounting firm believes that Kaisa has the ability to cover its debts. However, the property developer also has large off-balance sheet liabilities that are difficult to estimate. We will continue to follow this audit of Kaisa. In a research note today, Monday, French-based BNP Paribas Asset Management forecasts that China's real estate sector will, quote, likely see significant easing in policies, end quote. The asset management firm has had a long position with the sector for several months now. Quote, we are of the view that we are at a major inflection point in terms of policy, and we are likely to see some significant easing. We are involved in the sector and we are positive in the sector. We have built this position over the last couple of months, end quote. Well, we will see. This morning, Monday morning, China Evergrande Group saw its shares jump nearly 12% after a report from over the weekend that expressed that the local government of Guangdong plans to release a debt restructuring plan by March, which may wipe out the 60% stake of the group's chairman. Let me also take this opportunity to clarify something we discussed on Saturday's episode. The financial intelligence provider REDD published a report on Friday. In the report, the firm expressed that the provincial government working group, this is the Guangdong provincial government working group that was put in charge of Evergrande's operations, is planning to separate the company's offshore assets, then sell them and use those proceeds to pay off US foreign debt. That is what we meant to cover on Saturday's episode. So they plan on separating these assets for debt restructuring purposes, selling these assets, and then using the foreign reserves, the proceeds from these offshore asset sell-offs to pay off foreign debt. And this came as a positive surprise for bondholders overseas and markets generally. Hey guys, I'd love to hear what you thought about some of the updates we covered in today's episode, so throw your comments below. Always love hearing from you. Thank you for watching. I'll see you next time.